Hello there, and a really warm welcome to this, our Melbourne market update for Q2 2024. Over the past 18 years, Ironfish has built a reputation for helping people build borderless property investment portfolios of properties around the major capital cities in Australia. And obviously offering research and insight about each of those markets is incredibly important. And I'm excited to share this market update that our research team has put together. It's got a lot of the key data and insights that our investors find extremely valuable, and we hope that you will find it valuable too. So I'm going to be covering things like the economy, supply and demand, the rental market, capital growth outlook for 2024, and even a 2024 market talking point just to make life a little bit interesting. So let's get into it. The Melbourne market, Q2 2024. So what we start off with always is looking at the economy. The economy, if anything, shows the lifeblood of that market. And often a healthy economy attracts people to that market. And certainly when money's sloshing around an economy, obviously that is good news when it comes to property. So let's have a look at the first piece of data comes from the CommBank State of the States Report 2024. And as you can see, for a report card, a pretty good report card, the first thing that really jumps out at you, of course, is that it's ranked number 2 for population growth, and ranking number 2 at almost 3% per annum population growth is absolutely insane. It's absolutely incredible. It's only second to WA that's got more than 3%, but it is an incredible rate of population growth, and it is slowly but surely creating all kinds of pressures internally in Victoria. And as we know, most people that move to Victoria move to Melbourne. Ranked number 3 out of all of the states for retail spending and 3 for economic growth. So there is economic activity, and we can see that too with a pretty healthy unemployment rate, guys. Look at this, 4.3%. The 10-year average is 5.5%, and here it's 4.3%. In fact, we've still got job vacancies. In other words, more people are required for these jobs. It's almost 30% above the 10-year average. So you're looking at a pretty healthy, from a job point of view, an attractive point of view, and certainly an affordability point of view. We're seeing record numbers of people move to Victoria, and in particular Melbourne. And that is one of the reasons why Victoria's situation, certainly in the outlook, when I go over the scorecard, you're going to see some things. So when we're talking about the property market, it's very much influenced by supply and demand. So on the demand side, we're really talking about population growth, and there is absolutely a population boom. Look at this. In the 12 months to September 23, almost 200,000 people, 192,000 people moved to Victoria. That is absolutely insane. It's a 51% increase to pre-COVID, but I remember these numbers pre-COVID. Even those numbers, that number 127,000 was huge, and now it's just gone to a whole new level. So this is putting all kinds of pressure on the Victorian market, and in particular, the ability to be able to provide homes for those people who are moving there or moving out of home or moving around in terms of the Melbourne market. So on the supply side, at the time when they're needing more homes, it's actually becoming harder and it's taking longer to supply those properties. And that's why it's very much a crunch. So forget about the long 10-year average. That's not enough. We need to not only have the 10-year average, we need to be exceeding it. And unfortunately, it's 12% in decline. There are 12% less approvals compared to the 10-year average. And this is really vivid when we look at the apartment supply in the market. We've got the lowest number of apartment launches, new projects in a decade. We've got the lowest number of commencements in a decade, and we've got the lowest number of completions for 14 years. Absolutely incredible. And as you can see there, the quote from Charter Kramer at the top, Melbourne's apartment market is predicted to remain chronically undersupplied for at least the next 2 to 3 years. Look at how far under that long-term average line it is. Guys, the apartment market is a real crunch point for in terms of Victoria. Now, if we're having a look, our own team did some analysis on the supply and demand, looking at the net average completions in the last couple of years versus the number of people moving. And what we've got is we're predicting at least a 33,000 home shortfall over the next 4 years. 33,000 homes. That is tremendous pressure in that market. And not only that, but what we're seeing, guys, with all of this is we're seeing tremendous pressure in the rental market. And the rental market is one of the best ways of looking at how undersupplied or oversupplied a market is. And it's very much a no vacancy sign. Look at this, the long-term average, you can see that big jump above 3%. That was COVID. We know Melbourne got hit very hard, but it's literally dropped like a stone since, and it's now 1%, 1.1%. And when you're at 1%, it means that rents are increasing. Look at that, houses have gone up in the previous 12 months to March by 14%, apartments by 10%. The yields are lifting. We can see the story becoming more and more compelling over the coming weeks and months in Melbourne. And that's going to start to be seen in terms of capital growth. If we have a look at the median value currently, houses haven't quite gone through that $1 million mark yet, 935, and units of 612,000. So it underperformed in the previous 12 months. In fact, since COVID, it's underperformed, only 3% growth in the previous year. And that's where the value proposition we see for Melbourne. Melbourne is a value buy for those of you who like that kind of strategy language. Now, if Oxford Economics' latest forecasts, only in the last month or so, are correct, they're predicting 21% growth for houses, 20% for apartments over the next 3 years. And that would take the median house price all of a sudden to just under $1.3 million in Melbourne for houses and almost $800,000 for apartments, which is just insane. And that is, guys, without the demand accelerator that is interest rates. And we know that interest rates are going to fall. All of the major 4 banks are all predicting anywhere between 3 cuts, 5 cuts, 6 cuts. So if we take the midpoint of about 4 cuts, that's 4 times 0.25%, that's 1%. When interest rates fall another 1% later this year or early next year, do you think that's going to have a further impact on the market? And our view is, hell yeah, absolutely will. It's going to be absolutely crazy. So when it comes, I mentioned I wanted to do a bit of a talking point in relation to everything, and then I'm going to give you the final scorecard in relation to the Melbourne market. So what I wanted to choose really when it comes to Melbourne is I wanted to talk about the data. You see, the data is so compelling with Melbourne at the moment. If you're looking for signs of things to come, you don't want to be an investor who's bought too late, you're reading the signs in your rear vision mirror. You have to look at the signs of what's moving forward. But check this out. I'm going to mention 5 of them. First one, there was 192,000 population growth in the last 12 months. It's the largest population growth by number in Australia. It's absolutely huge. We've got the lowest number of building approvals in 13 years. We've got a record ever tightest vacancy rate. We've got the strongest rental yields in 9 years, and they're rising, and they will continue to rise. We think there's going to be significant rental increases in Melbourne over the next 12, 18 months. And what Melbourne does do is it offers value compared to the other capital cities. You know, Sydney is now 51% higher in terms of its median capital value now. And I mean, that's just incredible when you start to think about it. But the data, guys, the data doesn't lie. The Melbourne data tells us that the growth is coming. And if we look at the scorecard, that's why we've said get ready for growth. All right, so if you're already an investor in your own Melbourne property, please don't sell. We would suggest you hold on, or you're going to be a bit sad later on. But it is a great time to get into that market as well too, before we have that demand accelerator with interest rates increasing. What you want to do, we've got a market here where there's been huge population growth. We've got not enough homes being built, an incredibly low vacancy rate and rents rising. And then we'll look at that 20 to 21% growth over the next 3 years predicted for the market. So plenty of interest to happen in relation to this market. Now, I would like to offer each one of you for watching the chance to follow up. You may have questions, you may want to know more about what's possible for you, but I'd like to offer you the chance to scan the QR code there and book your free PPA strategy session with one of our experienced strategists. Find out what's possible. Can you and how can you build a portfolio of at least 4 properties outside of your home? You're going to need a strategy to be able to do it. You're going to need a team, and you may just want access to many of the best new properties around Australia, houses, townhouses and apartments. And pretty much everything that we do is what we call off market. You won't see it advertised on realestate.com and those sorts of things. And so we're out there, our team is out there always looking for the best opportunities for Ironfish investors. Now, with 13,000 families that invest with us, over $9 billion of property has been invested in terms of their portfolios. You know, our customers probably know a thing or two about finding the right property. So book today, and you'll receive a copy of our My City Melbourne 2024 edition, plus a 15-year investment plan. So listen, thank you very much. I hope you got something out of this market update. It's only 10 minutes, but hopefully it's 10 minutes that's going to be significant for you and your investing journey. All the best for investing in 2024.